In the sales tax setup, you'll define tax rules or tax strategies for the locations, states, counties, cities, so forth that you work in. This video will cover only the instructions for United States. If you are in Canada, there's a separate video that discusses using and setting up this window. In order to set up a tax rule, you'll click on the first line in the lower half of the window and then give it a name. Typically your state. If you have multiple locations, you can select a location. If the tax rate is the same at both locations, then you'll probably leave it at all locations. The only time that you really would select a different location is if there's a different tax rate for each location. In that case, you'll set up a rule or strategy for one of them and select that location, and then click on item number 2 in the list and set up the other one with a different location and a different rate. So you select your location, press tab or enter, and then change your rate, and you type it in as a percentage, not 0.0765 in my example here. You don't need to type in a percent symbol. The local rate would be rare. Some states or areas have this. You could have a county rate that you need to charge in addition to the state rate, and so you type in the state rate in the tax rate box and the county rate here. If there's a city and county rate, you would add those two rates together and type them in here. The local limit is very rare. If you type an amount in here, let's say $1,000, then Q-Floors will apply the local rate on the first $1,000 of a sale total, and then the remaining portion would be taxed at only the tax rate. The local limit by line is even more rare. If you check that box, then the local rate gets applied to the local limit on a line item. So if there's a line of a sale that is $3,000, only the first $1,000 of that line would be taxed with the combined tax rate plus local rate, and everything above that $1,000 on that line would be taxed at only the tax rate. So that's the basics of setting up a tax rule for everyone. If you're in a state where you have no sales tax, you'll leave the rate at 0, give it a name, and then you'll select the sales tax on materials and labor, and then click save, and that's all you've got to do. For everyone else, you've got one of these options to select, and we'll talk about those next. The use tax law is applicable to most states, so we'll talk about that one first. Use tax law meaning if I'm the flooring dealer and I contract with a customer to install flooring, I owe the tax on what it costs me to buy the materials, not the retail value that I charge a customer. So the tax gets calculated on the cost of materials, and it comes out of my own pocket. Now you can pass it on to the customer in some way, and we'll talk about that a little bit, but there technically is no tax to the customer. So I'm going to click save here, and we'll close this window, and we'll look at a sale. In my job costs, we don't have a material cost here. Let's look at a different sale. So we have some materials, material cost, labor, material cost, labor cost. The tax in this scenario is getting charged on the cost of the materials. This $79.74 here. $952.64, $89.69 times the tax rate. So that's a use tax. It's coming out of my own pocket here. We will pay this to the state. To recover that cost, you can charge a miscellaneous rate if you'd like. You can set this at 0 and charge no miscellaneous charge, or type in a rate. If you use this miscellaneous charge, do not set the rate at anything close to your tax rate. In fact, you don't really need to. But if you put it at the rate, at the sales tax rate, or too close to it, and you have a sales tax audit, an auditor might judge that you are charging tax. It's too close to the tax rate, so it looks like you're charging tax. So if I had a 7.65% rate, 4 or 5% miscellaneous charge should cover it. And here's how that works. We have a miscellaneous charge down here at the bottom of this sale, $181.84. That's the 5% calculated on the subtotal. And you see, it's more than doubled our tax cost. So that's one way to recover this out-of-pocket cost. When you purchase materials, you have to mark it up and sell it at a higher price in order to make profit and stay in business. This is another cost, so we've got to mark it up somewhere, somehow, so we can make our profit margins. This is one way to do it. So then you would need to explain this to your customer if they ask what's a miscellaneous charge. So you'll need some way to explain it. Perhaps have that printed in the fine print of your sales invoice to define what it is. Some people say that it's something like labor warranties or warehousing fees, but you probably shouldn't say the word tax or sales tax in that description because it is not a tax. If you came right out and said, this covers the tax cost that I've got to pay out of pocket, that would be okay. But you don't want to mislead or imply to your customer that this is a tax when really it's not. You could charge that miscellaneous charge, and if a customer takes exception to that, you can double right click that miscellaneous box and change it, and perhaps add some comments that they still get labor warranty or whatever you've written in as your description of your miscellaneous charge. You can type in a comment that it still applies. One issue to be aware of with that is if you come back and make a change to the sale in any way that causes it to recalculate the total, we add a line, we clear a line, or change the dollar amount on a line, it will recalculate the total, including that miscellaneous charge. So you would need to double right click again and change it. If you don't want to use a miscellaneous charge, of course you set that rate at 0. If you do that, then your retail prices should cover the taxes. You just need to charge the customer enough to cover the tax cost that you have to pay. We have retail price formulas. I'm not going to go in detail about this, but there is a tax option. If this is checked, then Q-Floors will take the material cost coming from the product catalog, apply tax rate, add freight, and do the math to come up with a retail price that results in the profit margin you've indicated in your formula. So you're actually marking up the tax cost and including it in your retail price. So that's another way to do it. Another part of use tax is the cash and carry or materials only sales. You don't need to set up an additional tax rule in the setup window, because Q-Floors will simply charge the customer sales tax if there's no labor on the sale. So I've not selected any labor here, and we're charging sales tax on the subtotal. So to restate that, you don't need to set up another tax rule just for your cash and carry materials only sales. Just the one setup for use tax, and you can cover both situations, installed sales and material only sales. For sales tax on materials, not labor. So let's change this, and we'll save, and we'll restart the program. And after restarting, I'm going to start another new sales order and not save the one I just started there. And we'll create our sales order again. So we have right now a materials only sale, no labor selected. If we select some labor, we charge a price. The tax doesn't change. If we come back and select no labor, the tax doesn't change. So that one's very simple. As you fill out your line items in the setup where you have tax on materials, not labor, you can't delete the prices and totals and have Q-Floors calculate the tax. In other setups, the use tax setup and the tax on materials and labor, you can delete the prices and totals if you'd like and type in a total at the bottom, and it'll calculate the tax. This configuration, Q-Floors needs to know what is materials and what is labor so it can tax only the materials. So you have to do your prices. Let's look at the other setup. Sales tax on materials and labor. We'll save that and restart the software. So I've restarted the program, and if we start another new sale, this is very simple. Q-Floors is taxing both the materials and the labor. If we switch this to no labor, the tax changes. If we add labor back, the tax increases. So that one's very straightforward. You might need to set up more than one tax strategy in your state. One reason would be if you do business in another state. You either have a location in another state or you do installations across the state line. Then you should have an account set up with that other state and know and understand what their tax laws are and set it up in Q-Floors accordingly. So you would click on the next line and then some rate and then select a different tax option depending what it is in the state. Another reason that you would set up multiple tax strategies is if you have a different taxability for different types of materials or different types of jobs in general. Some states require that if the materials are, say, carpet and vinyl, soft goods, then the tax rate might apply to the entire job, all materials and labor. So you set up a tax rule for that. But if it's hard surface, then the tax law is use tax. So you'd set up the two options in here, the two rules or strategies. We've seen other states where you have use tax on, say, residential repair replacement jobs, but new construction, residential, commercial, things like that, other types of jobs are a different tax strategy, a different tax option. So you set up multiple tax rules and Q4s for that. If you set up multiple tax rules for the same location, either under all locations or you have two tax rules for say Broadway Avenue, two tax rules for Sherman Road, then you'll have a different window pop up when you start a new sale. So I'm going to leave these at Utah and Idaho with rates and use tax and leave it at all locations. Save, and we'll go ahead and close the program. So I've restarted the program and I'm going to click New, and we get this window. Select the type of job. Right now I've got different states. So really we're selecting the type of tax, which tax rule should apply to this job. So your salespeople need to be trained on the different tax setups that are in your system and how you've named it and why you've named it that way. And you want to obviously name it in a way that tells them which one to select. It should be fairly obvious. So you select one and click OK, and then this bar here shows which tax rule is selected and what's the rate. For changing a sales tax rate, you really shouldn't click on a tax rule and just change the rate. If you do, you get a warning message. It appears you're changing a rate that has already been saved in the system before. You may not have used it at all on any sales yet. If you haven't, then it's fine to change this. Click Yes. If you have used that rate on any sales in the past, you want to click No. Don't change the rate here. You can click on it again and it'll reload it, refresh that back to the original rate. And what you want to do is change the old rule first. Call this old, and we'll come down to the next item in the list. So we give it the new rule and name and a rate, and select the tax option. So you fill it out just the same as the others, you just are creating a new rule. And we'll save that, close the window, close the program, reopen it. And then all of your past sales are keeping the old rate. That's going to stay. It was written up under that tax rate. Most likely it needs to stay at the old rate. Now, if your state says that all past sales that aren't completed yet need to have the new rate applied, then you'll do what I'm going to show you next on all sales orders that are not completed. If the rate on the old sales can stay at the old rate, then you only need to do what I'm going to show you on new sales orders that you write up and on any proposals. I don't have any proposals in here, but any proposals that have been written and saved, if those ever convert to a live sale, they need to have the new rate. And maybe you need to send a new printout to the customer. What you'll do is click on the sale, of course, and click this bar below the email address and select the new rate. Click OK. You'll get a warning, switching job type. This could change the tax and the total. Are you sure you want to continue? And we'll click Yes. And you just go through each sale and make that change. Don't change your tax rates, just set up a new rule. After all the sales have been completed that have that old rate on it, then eventually you'll go into the tax setup and deactivate that old rule. That's how you use and set up the sales tax.